Today I'm going to take a look at stocks, oil, and gold before the markets open. One of the things that distinguish uh, an intermediate decline from a more minor daily cycle decline is the RSI tends to get oversold and stay oversold. And that kind of appears to be happening here in the stock market. That makes me think we've got a larger degree intermediate cycle decline in progress. Another thing that tends to happen is price will drop below the 10-week moving average, which you can see it has here. And usually it stays below it at least long enough to turn the 10-week moving average back down, or it goes far enough below it to turn it back down. So at this point, this looks like an intermediate decline in progress to me in stocks, not just a minor daily cycle decline. And I warned that this was uh, possible, that propping the market up too long, building too much complacency, uh, could lead to this mini crash type event. We're 20 weeks into the cycle. An average intermediate cycle runs between 20 and 25 weeks. Uh, an intermediate decline should run 4 to 6 weeks, but in order for that to have occurred and bottomed in the normal timing band, we needed the market to probably top right back in here, which I think is where it would have topped naturally if if governments weren't intervening. But we had an FOMC meeting here, and so the market was propped up into that FOMC meeting. Once we're past the FOMC meeting and the Fed put is lifted, then we start moving down into the intermediate cycle low. And most of these will unfold as at least 3 waves down. The A wave usually pushes the McClellan oscillator to deeply oversold conditions. Then you get some kind of a convincing bounce that tends to draw people back in a little too early, and then you'll get the second leg down, the C wave down, that prints the final intermediate cycle low, and the McClellan oscillator will usually diverge during that second leg down. But um, based on the futures this morning, it looks like the A wave still has further to go. If I put the Fibonacci retracements in here, you can see we've tested the 23% retracement. It wouldn't be unusual for the A wave to come down and retest the 38% level before we get our B wave bounce. So I'm not going to be trying to pick a bottom just yet. We don't even have a swing on the S&P. So in my opinion, we're in an intermediate decline, and I think it's too early to try and pick the bottom of the A wave just yet. Moving on to oil. Again, oil is struggling to get back above this 10-day moving average, and it's throwing off signs that it may be in an intermediate decline. You can see here prices staying oversold, and um, uh, and it has broken below this intermediate trend line. Also, as of today anyway, oil's trying to move back below this 10-week moving average. So I tend to think that oil is moving down into an intermediate cycle decline, kind of in conjunction with stocks. So I'd be hesitant about trying to pick a bottom in oil until I think the stock market has bottomed. And based on the tendency for ICLs and stocks to have 3 waves down into an ICL, it it may still be 2 or 3 weeks away before stocks complete that final intermediate cycle low. So I'm leery about trying to pick a bottom in oil as well. Gold, on the other hand, I'm pretty sure gold has completed an intermediate cycle low. It has broken through the intermediate trend line, and it trying to close above 1300 today. We've got options expiration on Friday, so I expect some shenanigans the next couple days, and they're probably going to try and pin gold. I would guess they're going to try and pin it below 1300 for options expiration, but this looks like an intermediate cycle low to me, and barring an attack later this morning or later today to drive gold back down, we're starting to get this. The RSI is holding in overbought territory. That's usually a good sign, a sign that an intermediate advance is in progress. During the advancing phase of an intermediate cycle, price tends to get overbought and stay overbought. During the declining phase, as you can see here, it tends to just drop away very quickly once price becomes overbought. So this is characteristic of the declining phase of an intermediate cycle. If the RSI can stay overbought here, this is indicative of the advancing phase of an intermediate cycle. One thing that is a bit concerning, maybe not for gold, but for mining stocks and silver, gold has made a higher high above the April peak right here. Gold made a higher high. Mining stocks have not moved above the April peak. So we've got a divergence here, and this may be an indication that an attack is going to happen on the miners, maybe for options expiration. They're trying to keep this pinned within a range of where they want to take this for options expiration on Friday. So, and sometimes the miners will suffer an attack and make a lower low weeks or even months after gold is put in its low. That was the case during the last intermediate cycle low. Gold bottomed back here in August. Miners, as you can see, were driven through an undercut and bottomed in September. They may be trying to set up the same thing here in the miners. It looks to me like gold probably bottomed back here in early May, but they may be setting up the miners for an attack when gold moves down into its next half cycle low or full daily cycle low. They may try and push the miners down and run stops below here. So I'm a little bit concerned that the miners and silver are being set up for an attack here in the weeks ahead, as they have not managed to create a higher high and move above this April peak. So something to watch, and maybe just take some precautions here. If you're in mining stocks, they may be setting this sector up for an attack in the in the days ahead, and with options expiration coming Friday, it may be coming the end of the week.